Hello traders, hello everyone, and welcome to our new video update here for the mid of the week. This video has been sponsored by Orbex. I'll look at the euro dollar, crude oil, S&P 500, dollar, Mexican peso, gold, pound, Aussie, and also a quick look at Bitcoin. So what we are looking at here on the euro dollar, if you recall here on the higher degree time frame chart, we are observing the corrective price action. So this can be either a flat correction, potentially can already be bottoming here, okay, meaning that we at some point will expect push to the upside, or maybe that's still going to be a higher degree and deeper correction here if the current rise will stay and be looking corrective. Okay, so even the 61.8% of the initial move up can still be retested here. So for now it's quite tricky situation, but it can be a little bit too soon to say that euro is bottoming, and the reason is here on the 4-hour time frame, where the rise for now somehow is still in three waves. It's not impulsive yet. Of course, it can become a little bit more extended wave C or wave 3 if today we can break 107.56 resistance level. Keep in mind that today we have the Powell speech, and also there are some other FOMC members that will also have speeches, so definitely they can define the next move for the US dollar and put some volatility into the markets. But for now, as long as we are here above 106.10 bearish level and below 107.55 bullish level, it's a no man's land. So this can easily be a corrective movement, and if we break today this level here, then I'm afraid that we will see a new lows here for the euro and even some interesting opportunities on the way down, okay, the short opportunities. If, as I said, we can break these resistance levels, then maybe this current rise can even be 1-2 bullish scenario. So for now, it's a no man's land. We have to wait on market to make the first move, so we have to see a break out of this range. But for now, it looks like we have some minor impulse from the recent highs, so I'm afraid that we either stay sideways or even bearish. Looking at the crude oil, we are coming to the downside. We have been talking about this bearish price action, and we expected a deeper correction of wave B. Notice that we are now here at the former wave 4, so that's the first support. The deeper support would be this swing high going back to May and June of this year here, around $75. So for now it looks like that weakness is still here. It could be even deeper, because notice that yesterday, or I should say over this week, actually we have seen quite strong drop here, and this kind of a price action, okay, suggests that this can actually belong to ongoing bearish impulse. So I'm looking for still for wave C, but it can be a little bit more longer and deeper here or extended. So I'm looking for more weakness now, and should be aware of this more weakness as long as we are trading here and holding this $80 per barrel. So that's going to be a very important key level. So as long as we are below that level, wave C can be extended and even deeper, but I still will expect at some point a reversal here on this market. But after 5 subwaves down, will complete this current sequence. So for now that's still not the case, but after these 5 waves down, I will carefully observe the price action. If we will see 5 wave bounce afterwards and potentially will recover back above this $80 per barrel, then I think that bottom will form and some more upside could be seen later on. And if we really are going to see maybe crude oil stabilizing here, let's say by the end of the month, then I'm afraid that higher crude oil prices could again bring inflation to the upside, and this could have a positive impact for the US dollar. So that's definitely something we have to observe. Now let's take a look on S&P 500. So stocks have seen a pretty nice and steady price action from last week. We have seen a very nice, interesting recovery. It's been the case because market believes that maybe Fed signaled that they are done with hikes. And also we got the non-farm payrolls report on Friday, which came down worse than expected. So we have seen a pretty strong rebound here, and for now stocks, at least for the short term, they look very good, I should say. I mean, we have this very strong impulsive rise, broken wedge, so even the rise can be corrective. I think that there can be even room for 78.6% because that's still only the first leg of a minimum 3 waves higher. However, there can be some pullbacks. There's a very nice resistance at 44.30. So looking at the intraday chart here, that's this resistance, and notice that these first 5 waves up could be now in late stages here. So I think that stocks, yes, could see more upside, but I don't believe that this will happen in straight one forward move. There can be a new setback. So after the next 3 wave retracement, I think that there can be opportunities on the long side. So I'm looking temporary, at least temporary, for more gains on stocks as long as we are trading here and holding these October lows. Now let's take a look on dollar Mexican peso. Why I'm looking at this pair is because if stocks are really back in the risk on mode, I think that Mexican peso could be very attractive. Dollar Mexican peso has seen a very nice, interesting move to the downside here. It broke this trend line after bulls failed to break above this downward line. So downtrend is still in play here, and what I really like is that dollar Mexican peso here is in downtrend despite lower crude oil. So Mexican peso is doing well despite lower crude oil prices, and we have also stocks moving to the upside. So even if even if crude oil will stabilize, I think that this could be a next push to the upside on Mexican peso versus the US dollar. So dollar Mexican peso can stay in downtrend, and I would not be surprised if in the next few weeks we will be trading close to these lows from July and August. Now let's take a look also on gold. Now gold has seen a very nice, attractive, interesting, sharp recovery here, sharp bounce. We took this trend line out, so I think that more gains certainly can be in the cards. And what I would observe on a smaller time frames is the current retracement. Well, the current retracement is already in 3 waves, as we can count A, B, C here. But notice that there is very nice supports not far away. When you look here, that level of levels from that goes early September, and then you have late September. So that's a pretty nice swing highs that could attract new buyers here. So watch out for potential support on 1950 area. That was also the area of this minor wave 4 here. So I think that this could be quite interesting for potential bounce. Okay, but I also like silver, as we discussed last time. If you will check that video from last week, I think that silver is also coming to very interesting support area as well. And now let's take a look on pound AUSD. So as I said earlier, stocks are back in uptrend. We have seen very nice broken trend line here on the S&P 500. Normally in risk on mode, commodity currencies can be much more attractive than euro or pound. Okay, so looking or having this in mind, I'm looking at pound AUSD for potential more weakness here. So it can be a head and shoulders top formation. We are currently just consolidating now, so waiting to see if this week we can finally maybe break this neckline. Then I think that either we go lower for wave 3 or wave C, but there can be some opportunities on the short side. If this range will resume and even maybe test the upper side of this range, then watch out for resistance at 194. Okay, that's still going to be a very important resistance in my opinion, if this neckline for now will stay in place. So from an Elliott wave perspective and with combination with head and shoulders pattern, basic technical analysis, I assume that this could be actually a top formation, and that we could see more weakness after this current sideways consolidation is finished. And now finally, let's take a look on Bitcoin. So cryptocurrencies are in uptrend. I really like the fact that they actually moved into this recovery mode before we have seen this bounce on the stock market. But now when we also have higher stocks and potentially the US yields approaching the end of this current bullish phase, I think that maybe if dollar will be sold further, this could be very positive for cryptos. So I think that cryptocurrencies here could see more upside. We are here tracking potential correction within uptrend. So wave 3 can either be finished and ABC drop within this wave 4 can still take the price a little bit lower. 32,000, 33,000, that would be ideal support. But maybe this current move to the upside can somehow come from a triangle, so wave 3 could be even extended higher. So the idea is still to wait on a deeper healthy pullback here for 23.6 or maybe 38.2% retracement compared to wave 3. So whenever we get this retracement, I think that there can be opportunities on the upside. So watch out for more gains here on cryptos. Invalidation level obviously is far away because wave 4 must not trade into territory of a wave 1, which is actually here below 28,000. But if we see a third break below 30,000, that's somehow psychological level, that would be the first indication that cryptos completed the current bullish recovery. But watch out if we see a pullback, let's say from here, suddenly that would be a very nice support also at 32, because it goes back to July swing highs. Okay, traders, thank you very much for your attention. Hope that you enjoyed this video and talk to you soon. Bye.